Let's bring in senior markets correspondent Kevin Green to discuss the levels that he's watching. Kevin, before we get to those levels, I just wanted to check in with you because a couple days ago we talked about, were saying from a technical standpoint, you were seeing some reasons to be cautious in terms of potential pitfalls. Has any of that changed, especially given the rebound that we saw yesterday?
No, I mean, the resistance levels, when you're looking at technicals, those still remain the same here. I think when you're kind of looking at what happened yesterday, obviously we had a 2% down day to start because of GDP, which is kind of something, one of the things that I highlighted here. But you also had month end and then obviously earnings. And so what you're kind of looking at right now, if you're kind of looking at the internals, Caroline, what makes this a little bit different is that the Mag 7, especially, the AI story is still alive and well. And so we can have markets where we see a concentration when it comes to those names, kind of similar to what we saw in October, November, and pretty much December of 2023, where pretty much Mag 7 was pretty much carrying the market. That can continue to happen here today. And actually, if you kind of look at it, and we can kind of look at these charts here because of that question, let's go to the monthly chart for the S&P 500. Obviously, the candle is actually pretty decent. I mean, we had a nice little flush to the downside. We got within about, let's say, 2%. 2.5% or so from the 50-month moving average here, but we did see some buying activity coming into the market here. We did recover that 20-month moving average. And if you're kind of looking at the past drawdowns, that 50-month moving average has been fairly key. Once again, we did not touch it, but we got fairly close when you're looking at it on a relative basis. RSI has still broken an uptrend, so we have to be mindful of that. And MACD is still in this bearish formation or this bearish cross, but you have to give credit to the technicals here because traditional downturns, we get fairly close to that 50-month. And so you'd like to see some follow through here. Can this be, may we have seen the bottom already? I would say that could be the case here. It seems like it wants to really be the bottom. And unfortunately, if you're a bear in this market, you're going to need to have something else really try to hit this market. And if you're going to have the tailwinds of technology, that is going to be very, very tough. I want to go to another chart before I kick it back here, because if you look at the NASDAQ 100, 10-year monthly chart, once again, this is actually a very bullish chart. And so you can't really have bearish S&P 500 without having and a bullish NASDAQ, right? It's just because of the market weighting of both of these indexes. So what did we see last month? We saw a flush to the downside, but the NDX actually closed higher for the month. That is a bullish hammer, a very bullish hammer, a very long wick. The longer the wick, and if you can finish higher for the month, the more bullish that candle is. Now, if you're looking at the MACD, still in a little bit of a bearish formation that can still develop over the monthly. RSI is still actually holding its uptrend, even though we did see a breakdown to the downside here. We were about 5% away from that 50-month moving average, which once again was a key technical area of support that we've seen in the past or in past drawdowns here. But what is this different? Is this really different than what we saw back in February of 2022? A little bit. And the reason why we actually had a neutral at this point of the pullback, we actually had a neutral, let's say somewhat bullish hammer candle, but we still actually closed low for the month. When you're looking at the month of February, we had a green candle the next month. We tried to attempt to hold that 20-month moving average. And then basically once we got to around April of 2022, that's when we flushed to the downside and hit that 50-month moving average. So I would say it kind of depends on your perspective. You treat this as a normal correction like we've seen over the last 20 years until the dynamics really change. But the NDX is really telling you bullish formation right now. S&P 500, not so much as bullish, but you have to look at the internals, and the internals are really saying if concentrated market of Mag 7 names, if that's going to be this market that we've had, and we've had this in the past, you gotta say, for the most part, that this is a setup for a bullish take right now. But we are hitting a technical key area of resistance when you're looking at the weekly. And so monthly charts, weeklies, and dailies are going to show you three different scenarios here. It just depends on your time frame that you're trading.
Okay, so let's talk about the daily charts. S&P 500 currently trading around 5610 right now. Talk to us about the levels that you're watching today.
Yeah, so if you're looking at the levels for today, what I'm actually looking for is 5630 as your first area of resistance. We opened up at around 5626, and then we saw this, failure to the downside here. If you're looking at it more long term, like we do have on this daily chart here, the 50-day moving average sitting at around 5591. We are above it right now. That's going to be your one area of resistance, getting close to that 5600 level here. So we are once again making some incremental gains. We want to be able to hold this, not really have a fake out. The next area to the upside that I'm focusing on is 5670, and then obviously 5700 has a lot of that short call positioning sitting there. To the downside, 5400, that also kind of aligns with this uptrend that we've seen from the lows, right? The higher lows that has been pretty much for the most part intact here. MACD for the or for the S&P 500, 12 EMA looks like it wants to cross above the zero line. That's actually a bullish formation as well. Intraday, 5630, first area of resistance. We break above that 5700, which is a tall order, but we've seen crazier things over the last couple of trading sessions. Any type of breakdown here, you actually have a pretty decent gap to the downside before you start getting really concerned, which is going to be around that 5500 level to the downside. So overall, this is actually a really decent setup. We do have some earnings coming up, but if we want, once again, kind of looking at that weekly chart, and we're looking at the E-mini S&P 500, we're hitting the anchor VWAP from the highs right now. And so we've rejected that every single time that we've attempted it throughout this downturn here. Let's see if this time is going to be a little bit different. And if it is, and we're able to close above it, start to retest, let's say 5,800 on the E-mini S&P futures, that probably gives you a little bit more of a clear sign that maybe we are, the market's pricing in that we are out of the woods. Doesn't mean the economic data is saying that, but it seems like the market is willing to put money to work in tech that might be a little bit more insulated. And even though we might have some lagging sectors like consumer discretionary, which doesn't look that great when you're looking at the weekly and monthly.
Okay, and let's see if Amazon and Apple can really give us some carry through on the strength in big tech. There's some optimism around Amazon right now, not so much around Apple, although it is inching closer to the unchanged line. I know you're also paying attention to oil. We're seeing that continue to fall, trading just above $58 a barrel right now, which I will say is actually pretty good compared to some of the levels or the forecast that we've been getting from guests earlier this week. Carly Garner was talking about oil at 50, potentially even in the 40s. I know Scott Bauer pretty bearish on it. So tell us what you're looking at when it comes to oil here, Kevin.
Yeah, I would say two amazing analysts out there, and I kind of agree with them. If they're looking at the technicals in the weekly chart, you can make the case that $50 could be on the radar, and if we do break below that, $45 seems like perceived fair value in this market. I will say before we hit the chart, gasoline's not moving in the same type of manner per se, and so we have to be mindful of that here. But crude oil, the breakdown to the downside compared to the S&P 500, this is a log chart to really try to reduce some of the noise that you see, especially on a longer term time frame. This is actually going back to 1983. You are seeing a disconnect. Usually, crude oil is actually a leading indicator to the S&P 500. But crude continues to break to the downside. Now, it had a really nice recovery overnight. We were trading in the 56 level for crude, so it's trying to come back here. But we usually do not see this disconnect. Outside of 97 to basically 99 is where we actually saw this disconnect, where equity markets continue to rise higher. Crude oil prices will continue to move to the downside here. So we can have a divergence. Maybe this time is going to be like a 98, 99 type of scenario here, but something to keep on the radar. When you're looking at the commodity space just in general, it pretty much a lot of these commodities, almost all of them right now, are signifying an economic slowing. Even copper, which has gotten really stretched to the upside here, trying to hit an area of resistance, has really just seen a little bit more of an aggressive pullback, more than probably what you would like to see if you had this economic boom type of narrative taking place here. So keep your eye out on crude. If you break the $50 level, I think we would be a little bit more concerned. And unfortunately, we're going to see the impact when it comes to the inflation numbers. It will be a deflationary scenario here, but over 2 to 3 months, Caroline, production here in the United States will tighten up, and supply will tighten up in order to match what the prices levels are what they are showing. Any type of spark in economic growth there is where you start seeing a massive re-rating to the upside for crude. So right now, bearish for now. But once again, you don't really want the supplies to really contract too aggressively in order to stabilize prices, because that re-rating to the upside can be very aggressive, like we've seen during COVID-19 or even past economic slowdowns.
Yeah, certainly didn't see that spark with the GDP report yesterday. Kevin Green, we'll leave it there. Thanks so much.